All right, everyone, welcome. Just to give everyone kind of a sneak peek of what to expect for next week, we will be going over pump and dump and pump templates. That is what I would be looking for. Uh, but I see throughout the community, one of the most widespread questions is the selection process, how I'm filtering what I'm trading for that day or week. Now, our edge is going to be from our filtering process. It will not necessarily have anything to do with the peak formations, the setup, the signals, whatever. But our edge will be, I'm just gonna draw these up for just a second. Now, if you don't have these three models drawn on a sticky note, somewhere where you can see it on your desk, I highly suggest you do so by the end of today. I'm going to talk about these three patterns, and then I'm going to go over a few pairs from Monday to Friday to go over the process of identifying the highest probable trade scenarios for the week. Now, all of these is a part of my 1, 2, 3 system. Now, I've been preaching this a lot lately. I've been talking about tracked volume because that is where my edge lies. That is also where my filtering process will lie. In order for me to take a trade, I need to see traders trapped in the wrong direction. But just to keep it very simple, let's just say that, for example, I'm going to highlight all of these for just a second. All of these patterns have trapped volume, all of them. Now, these are the patterns that I'm looking for if I'm looking for a sell high setup. Now, they can set up quite different. Now, what doesn't matter is the actual pattern. What does matter is the trapped volume, because this is how I am filtering out what I'm trading for that week, for that day, for that session. I need to see trapped volume. Now, let's just go over 1 and 2 for just a second. Variation one, which is probably the most common for 3-day patterns. Variation number one has a peak formation low, a peak formation high, and they break structure and create lower lows during or prior to that third session. Now, remember, this third session can be Asia, London, or New York. Now, here's one thing that I do want to make very clear, because this is one of the most widespread questions. Entries, entries, entries. I want you to look at all three of these models, and I want you to understand that your entry and your stop loss is predetermined based off of the area they should and will shift the volume. Your stop loss will also be predetermined based off of where that volume is being tracked. And our take profit levels, minimum, will be back to where the pump began, minimum. So I need everyone to understand why I'm looking for these patterns. And I'm not just looking for these patterns. I already know where I'm getting in. I know what time I'm looking for these setups to appear. I know what levels that need to be triggered. So for example, previous day high, it could be the current day high of day. It could be the previous week's high. It could be the closing price. It could be Friday's closing price, et cetera, et cetera. I need traders triggered and trapped in the wrong direction. Now, again, these are all pump and dump templates. If you flip these upside down, it's the exact same for a dump and pump, but be worrisome if you are a short biased trader like myself. This variation over here will be slightly different from the first two because it starts off with a peak formation high first. The other two start off with a peak formation low. This is very important. I need Asia to be the low, or this could be Monday, this could be Tuesday, this could be Thursday. Point of the matter is, I need a peak formation low, a peak formation high. Variation one traps volume above the higher low. So higher level longs are being trapped. They're breaking down and underneath that area. So we have trapped volume up top. They did not break out, but there's still volume underwater. Variation two, which is one of my favorites to look for, it's the easiest to spot the trap volume because the trap volume will be above the breakouts. So they'll trap volume first. I'm not looking to get in up here. I'm looking to get in underneath or at the breakout level for the collapse. You could also just wait for example, this could be the lower low before 9:30 open. 9:30 open goes for a stop hunt. And somewhere around that 9:45 to 10 a.m. window, they will give the continuation. So there are slight variations of this, but point of the matter is that they trap volume up top. I'm looking to see if there's trap volume before my session starts. Now, if they did not trap volume yet, be aware that that third session can and will be the trap. And here's why we're waiting for 10 a.m. We wait for 10 a.m. because by the time 10 a.m. opens, they should have already trapped traders, trapped breakouts. Understand this. Whenever breakouts are triggered, previous day high level, current day high level, current week, previous week, whenever breakouts are triggered, their stops are on the other side. And if breakouts are triggered, right, this could be the start of a day. This could be Asia, this could be London, this could be New York. By the close of this day, look who got triggered and look who's underwater. They're underwater, but who's in the money? Shorts, shorts, shorts are in the money. Shorts are in the money. And if breakout longs, remember, if they're underwater and their stops are here, the very next day, that is where I will look to see if I have for example, a pump and dump templates. This is one way that it can look. They can trap volume before the US session. This can also be before London for the breakdown. So getting in somewhere in this area, stop loss up top. They could also, for example, they can break out first. If they're doing so, I simply need them to pull back and trap volume, trap traders above the breakouts. In order for me to have a successful trade, I need to know someone's losing. I need to know someone's on the wrong side. And the timing confirms it all. This should be somewhere after 9:30. Now there are times where 9:30 is the trade. And if 9:30 is the trade, that's because, for example, I would draw this up. For example, Let's just say this is our closing price. This is the 9:30 trade. 9:30 will open up near or at the closing price. There will already be trapped volume. There should already be trapped volume by the New York Open anyway. And if no one's trapped in your active stream, guess what? That session might just be the trap. So be patient. But again, 9:30 can offer beautiful trades from the closing price. And that is all you need to know about 9:30. If you're not at the higher low of the day or at the closing price, don't touch 9:30. Don't trade before 9:30. Now, there will be trades where I will take before 9:30, but the earliest that will be is at the start of the second hour. And I'm only doing that on the metals and oil. I will not trade a US index, a US stock before 9:30 because 9:30 is where my edge relies. I want to see if 9:30 is the trap for the shifts, or 9:30 can even oftentimes be the breakouts. 9:30 will break out, and then we may get 15 to 45 minutes of pullback for our continuation. Low hanging fruit, breakout, pullback, continuation. As soon as I'm back below this level and I recognize that volume is trapped above that breakout, because again, they do trap volume for trend trades. They will trap volume above or below that breakout, depending on if they're going up or down. Yes, one more time for just anyone that didn't hear me clearly. Trend trades will trap volume. For example, if it's a downtrend, they'll trap volume inside of that breakout. If it's on the way up, they can trap volume below that breakout. And once they come back in breakouts, I will take a position. My max stop loss should be somewhere behind the trap volume. If I'm aggressive, I'll just put it behind the breakout. And TPs, one full expansion, two full expansions, minimum targets will go back to the high. Now let's go over a few charts. This is the fun part. Enough of the drawings. I'm going to start off with a pair like EuroCAD. EuroCAD had pretty interesting setup. Now I'm not going to be flipping through multiple time frames. I'm just going to be giving the gist of what my edge is. So take notes, pay attention. But more importantly, I'm going to show you why keeping it simple is the best thing possible that you can do. Day one, Monday, triggers the previous week's low. As we see here, previous week's low has been triggered. They close in breakouts. Shorts are in the money. Day one shorts. Oops, I cannot type right now. Day one shorts are triggered. Now remember, I want to see trapped volume above or below a level to confirm that I'm in the right direction. Just to keep it really simple, they trapped the longs above Friday's close. And they did this during the US session. But if you're not used to trading Mondays, because on Monday, I am actually looking for a 3-session setup. What do we have here? Asia low, London high. They trigger breakouts one more time in the US session. They engulf and they're gone. Now, there's no worries if you missed this because the closing breakout is a signal. It is one of my favorite signals. And I'm just going to show you why. Now, coming into the US session, let's just pretend that you cannot see the US session. On Tuesday, coming to the screen, first thing I'm looking for is trapped volume. So if that's the case, one of the first levels that I'll look at is the previous day's high, previous day's low. Now, a lot of traders, especially in the beginning, will be a little bit too ambitious when it comes to looking for trap volume. They'll say, oh, they triggered the previous day's low, they're trapping shorts. No, shorts are not trapped. Shorts got triggered, but they're not trapped. Longs are still trapped for Monday. If you went long above the closing price, you are now underwater as well. And lower low is always the recipe for the pump and dump. So now we have day two shorts triggered. That is a signal. Now remember, day two shorts is the signal for day three shorts, but they do not have to reverse. They can continue with the trend. Now I just want to show something here. They triggered breakouts on Tuesday, correct? And they also closed in breakout. One thing to notice is that everyone that got triggered at the breakout level is still in the money. They're still in the money. Now, had they did something like this, closed back inside the breakouts, okay, maybe we see higher highs on the inside and they trap shorts below the breakout level, then yes, this could be an excellent buy low setup. But they never did that. Now, where's the trap volume? First two levels I'm looking at is the previous day's high, previous day's low. Okay, they did not trigger those levels as of yet. So the very next level I would look at is the closing price. And I'm just asking myself, if they're going to continue shorts, are longs trapped at the high of day above the closing price? Yes, they are. Longs are trapped. How do I know they're trapped? Because if there were breakouts or long orders from the closing price, by the time the New York session opens, they're underwater. And that will be the reason I take this trade. Now, I'm just going to keep it really simple. I'm not going to go to lower time frames to talk about any of that as of today. But for right now, Wednesday's shorts got triggered. They closed in breakout, day three shorts. And guess what? They're still in the money. Now, Thursday, funny enough, the range reversal day. Thursday triggers shorts and they engulf the lowest bear candle, being a potential signal that this is the peak formation low. So peak formation high Asia, peak formation low London, higher highs on the inside. That is the recipe for the dump and pump, the bottom. And they do give that opportunity. And they do also come back to the money, the original breakout from Wednesday, potentially as a max target level if traders were potentially looking for that at the end of the London session. Because look what's happening here. Shorts are trapped. They're not going to just let them out. Now, I wouldn't be surprised to see if we get a buy setup on Monday. We have longs triggered. Now, mind you, the longs that were triggered on Friday are currently underwater. But if they somehow come back in the money, now remember, shorts are trapped. As of right now, I don't see a reason for them to go back down right now. Now, don't get me wrong. The market can do whatever it wants. Peak formation low, peak formation high. If longs are still trapped and they're just breaking down, okay, we could see a return back to these lows. But again, I have no idea. I want to make this extremely clear. If you're coming to the chart, for example, right now, I have no idea what they're going to do tomorrow. I have no idea what they're going to do the next session. But what I do have an idea, what I do know is that longs are traps. This is a daily chart. Longs are trapped. Shorts were triggered at the low of the month. Not only are longs trapped above the previous month's high, they're trapped above the closing price. Now we have shorts in the market. Just because this is the low of the month, I'm not going to call any of these a first green day because this could just be a pullback for a continuation. Now, let me clarify first red and first green day since we're on the daily chart, just really briefly. First red day is when you have longs trapped. First green day is when you have shorts trapped. This is the most recent breakout down low. They didn't break the actual low, but that's the most recent breakout. They trigger shorts. They hit their stops. They're underwater. They break out. They pull back. They're still underwater. That first green day is now our bias. Now, because we're on a daily chart, I do want to make something clear as far as its fractal nature. Because reading a daily chart is actually pretty simple. Black means down, white means up. Black means down, white means up. Black is down, white is up. Follow the money. Now, what I want to make very simple is that whenever I see a close in breakout, or for example, a engulfment. Actually, let me straighten that up. That's gonna make me insane. A engulfment. If I see a engulfment, what this represents, and mind you, this is fractal. This can be a 1 minute engulfment, a 30-minute engulfment, 15-minute engulfment, daily chart engulfment. What does this represent? This represents a breakout. Now, I'm just going to draw this across in its line charts formation, starting with the bull candle. Open, low, high, close. Now, let's just pretend this is a 1 hour and this is a 5 minute. This could be two completely different time frames. This could be the daily, and this could be the 1 hour. I'm just going over the fractal nature of what a engulfment is. Now, you see how the second candle, the actual engulfment, took out the wick. Now, traders would think that that's insignificant, but I'm just going to show you what that is over here. Open, high, low, close. They broke out. They engulfed. Now, in order for me to continue short, just going to ask this question. You can answer this in the chat if you have an idea or if you already know. For me to sell this market, now mind you, we already have long straps. They already broke structure and broke out. For me to short this market, what do they need to do? If anyone knows in the chat, you can go ahead and paste in the chat. If you don't know, you can just wait for the answer. It's actually really simple. Pull back, pull back, pull back. They need to pull back. Correct. They need to pull back. So for right now, because a lot may think that the daily chart is hard to read, but it is actually probably the easiest chart to read. Let's just pretend that this is a daily chart. Bull candle, bear candle, engulfment, which is the closing breakout. In order for me to continue short, they need to pull back. And the end of the day, could very well look similar to this. They pulled back and they continued. Now, this whole wick, because whenever I see wicks, because look here, they broke out. They closed and break out. They trapped longs. Longs are in the money. They're about to get stop hunted. First red day signal. That's our bias. But they broke out. In order for me to continue short, they need to pull back. Now, funny enough, let's just split this up as if it was 3 different days. Day one, day two, closing breakout. Day three, oh, funny enough, what do we have here? P formation low, P formation high. Okay, they trapped volume above. They're breaking down, pulling back, and bingo. Here's where I'm targeting for a parabolic opportunity from level to level and to be done with the day. Now, if they were to continue lower, now because the next day may not pull back, they may not wick up at all. It could just be a no wick candle. That means that most likely in that Asian session, they just continue for a full range expansion. Now I'm going to go to a gold charts on the daily charts to go over something really, really simple here. I'm going to draw the line equivalents for these charts. Here's the opening range of the month, first candle. That's always the opening range. They trigger shorts. Okay, they trap them for that time and go long. They trigger longs. Now, they're not traps because let's just read the market for just a second. White means up. And what is that? It's a closing breakout. So what does that mean they're doing right now? They're breaking out. In order for them to continue higher, what do they have to do? Pull back. Black means down. White means up. That's a continuation. This is a higher high. That's a higher low. And now we have a new higher high. They're pulling back. Higher low. They're pulling back. Now, check out what's actually happening here. Trend trades. Funny enough, trend trades trap shorts on the way up. They trigger shorts and they trap them on the way up. Longs are triggered for the third time in the month. The first time was here. The second time was here. For the third time this month, they trigger breakouts. And what do they end up doing? Now, I wouldn't necessarily call this my first red day as of yet, but don't get me wrong. It can still be called a first red day because why? Because longs got triggered and they're now in the water. Now, this was more so my first red day because at the close of this day, look who is obviously underwater and look who just got triggered into the market. Shorts. Now, I am actually reading this day by day. I'm not trying to figure out where the market's going. All I know is that when it comes to a daily chart, it's actually pretty simple. It's usually just day one, day two, day three, day one, pull back, day two, pull back, day one, continuation, day two, continuation, day one, pull back, day one, continuation, day one, two, continuation, day one, pull back, day two, pull back. It just moves very intentionally in one direction or no direction. And if it is no direction, that is because they're just moving back and forth in a trading range. If you go back on your daily charts, whenever they are moving in one direction, they're quite literally moving in one direction, which means I'm just going to point out everything that is not a first red day. That's not a first red day. That's not a first red day. None of these are first red days. And why is that? Because they just broke out. Longs are not trapped. They're breaking out and pulling back. Now, had they actually trapped longs, okay, then maybe I will have a first red day thesis. But this is a market that is clearly just breaking out and pulling back, breaking out and pulling back, breaking out. Now, this is the first red day. And why? It's an outside day, but it's a first red day because they trap longs. Now I have a reason to go short. Now I have a reason to go short again. Back to the breakout. Now I'm just gonna point out everything that's not a first red day again. Not a first red day. Not a first red day. Not a first red day. Absolutely not a first red day. Absolutely not a first red day. Now let's just go over the month. Beginning of the trading month, breakout, pullback, breakouts, pullback, breakouts, pullback, which ended up being two pushes down, breakout. Now look at this. Look at the previous month's close. By this time, by this day, this actual day here, by this day, who's trapped? Who's underwater? I'll just highlight it so you can see. We have shorts underwater. They're going to continue long. And no, that is not a first red day. That's a pullback after what? A breakout. Now, at this time, this is where it gets interesting because heading into the new month, they trap longs. And we have shorts triggered into the market. But if they're going to trap longs and keep them trapped, okay, now I will have first red day theses in mind. For example, let me just check what day that was. Okay, Monday opening range. I'll start with the opening range. Now remember, I have a hypothesis, have a larger time frame thesis that longs are underwater. Breakout longs are underwater. They're trapped above the closing price. They're trapped above the previous month's high. They're trapped above this breakout from the previous month. Monday's opening range. This candle here. They trigger longs for that week on Tuesday. And then they trap them. Longs are trapped. Now, in order for this to continue, I'm just going to draw out the line equivalent of that 3-day pattern. Here's the first day, bull candle, open, low, high, close. Now, mind you, this is the opening range, high. Day 2, open, high, low, close. Look how they just closed. So for those that are confused about the 15-minute rotations, understand that that is extremely fractal. That same idea, I'm using that same idea on the daily chart. And if I go to a 1 hour or even a 15-minute, these two candles will look exactly like this. There will be a P formation low, a P formation high. They just trapped volume, a lower low on the inside. That's how they closed. And then the next day, now I don't know the exact 3-session template they gave, but if I was to guess, Asia high, London breaking down, New York breaking down. If I was to guess, because they didn't pump significantly from the closing price, but they still pumped from the closing price. and then continued in the downward direction. Because why? Because longs are underwater. So having a strong thesis on the daily chart can give you an edge the next day or days. Now remember, if longs are trapped, where's the money? Where are their stops? Now I want everybody to take a mental screenshot of exactly what you see here on this daily chart. Take a mental screenshot. Peak formation low, peak formation high, the triggered breakouts. Breakouts are trapped, breakouts are underwater. They're breaking down underneath the breakout level. Longs are trapped. They're continuing short and they're hitting the stops fast. They're going to the stops. Now, remember, take a mental screenshot of this pattern. And I'm going to show you that gold literally Monday and Tuesday literally gave us that exact scenario. Now, remember, when you rewatch this, before I mark this up, when you rewatch this, take a mental screenshot of exactly what I drew up on that daily chart, and you will see we have the same exact thing here on the 15-minute chart. Have the same element. I have a low, a high, I have breakouts triggered. I don't know they're trapped until they trap them. So I wait for them to trap them. I wait for my US session because there were traders looking for buys here. Now, I just would like to remind you, longs are underwater and we still have space to fall through. And they fall through that space with relative ease. And if you have any idea of, for one, why I'm looking for this template, you'll know that the entry, the stop loss placements, and take profit placements are predetermined. I already know where I'm getting in. I already know where the trade will be invalid. I already know where to take a minimum target. Everything is already here. Let me check these messages really quick. Yep, candle star formation. Morning star, correct. Morning star, evening star. These candle formations should start to make a little bit more sense. Like the three, they say a bullish pattern is when you have three candles in the same direction, three white soldiers. Now that to me, that's not really necessarily a bullish signal because let's pretend these are three daily candles down, three black soldiers down. Now, if I was to draw this up, it's line equivalent. I'm just going to add wicks here. Its line equivalent is open, high, low, close, open, high, low, close. The next day, let's just make this a large wick so you can see what that is, what they're doing there. Open, high, low, pullback, close. All of that wick is just a pullback. They that doesn't always mean a rejection. That could mean the next day it's a strong trend. They're still trending. They're still closing in breakout. They're still on the way down. So in order for me to go long, they have to trap shorts. Let's just say they closed bullish. They engulfed bullish. Actually, let's just say they did that. They engulfed bullish. Longs are traps. Now, in order for me to take the trade the next day, I need to see a pullback trap continuation. Market structure. So let's go over a few more charts. I have the German 40 as one of my favorites setups from last week, and I'll explain why. The Tuesday reversal from the previous day's high, pretty simple. Let's go to it. Now, I have my inside day signal. I'm gonna zoom out. You can't really see the candlesticks because I don't want you to see the candlesticks. I don't care about that. I don't care about that until I'm about to enter the market. But just taking a big zoom out here. Monday inside day, Monday opening range. That's all I know. This is literally all I know. I have a low and a high of the week. This is all I know. Tuesday triggers longs. And before the equity market opened at 9:30, longs are underwater. Whether you had it drawn like this, because they trapped longs above the current day high, or whether you had it like this, they ended up trapping longs above the previous day high, or whether you had it like this, they trapped everybody above the low of the day, above the closing price. Everyone's underwater. So if everyone is underwater, longs got triggered, and I know where their stops are, and they already gave me a lower low and a pullback. Mind you, we're below closing price. We're below every single EMA, the 50, the 20, the 100, the 200. And the timing aligns. All you had to do was place a position anywhere in this area, place a stop loss where it makes sense. Do not ask me where to place your stop. I'm just going to explain it here. If you're at the high of the day, let's say your entry is at the high of the day, your stop loss goes at the high of the day. If you're selling a lower high, because this is a lower high, if you're selling a lower high, your stop loss goes above the lower high. Keep it very simple. I don't care to be first. I don't care to get this. I just want to sell when I am confirmed that longs are trapped. And again, my stop will go here. Now you can have a starter wherever you want. But if you're struggling with the rinse and repeat process, I can assure you that heading into the day itself, let me just bring up another example. That was NASDAQ on Tuesday. NASDAQ on Tuesday. They had a inside day on Monday, just to look left. Similar scenario to the German 40. They trigger longs the next day. By the time New York opened, which is right here, longs above the previous week's high, longs above the current day high, longs above the previous day's high are underwater. They're trapped. Now, don't be afraid to see a retest of the trapped volume because that is simply just a retest. But after I am confirmed who is trapped, who's in the wrong direction, timings, levels, behavior, price. This was after major red news. This was the third hour, 10 a.m., right at the Friday's closing price, right at the previous day's high level. You place a position, you place a aggressive stop, a conservative stop, you place a stop loss, you place a take profit level, and you close the charts. Now remember, if I did not have any of these variables, if I did not have trap volume, if I did not have my, for example, my one Asia low, two London high, three lower lows, my one, two, three, if I did not have my levels to confirm anything that's going on, I will not be reading that chart. I will not be trying to figure out that chart because this is something a lot of traders struggle with. That's bias. Where can you get a bias? from the daily levels. That's where you can get a bias. Chat volume up top, that's my bias. Chat volume down low, that's my bias. Now, there were traders confused on why I took a long trade on Wednesday, and I'll just go ahead and explain why here. Now, let's just take a quick zoom out really quickly. I'm just gonna have to, I'll just redo the entire chart. Monday, inside day. Just gonna mark this up. Tuesday, day one longs triggers. Tuesday. Now, if day one longs were triggered and their stops are at the previous day's low, and they did not hit their stops, they're still in the money. And at the close of the actual day itself, because look at this, by the time they closed, they trapped shorts. And by the time the New York session opened, we're back in the money. Tuesday's longs are back in the money. The breakout level is back in the money. The previous week high of Friday's close level is acting as a level of support. Now, remember what we did on the daily chart? We looked at closing breakouts. We looked at breakouts. We looked at pullbacks. I'm reading the 15-minute chart the exact same way. Let's just look at the US session. Now, this is why time frame does not matter to me because, for example, I'm gonna draw this up. I'm gonna draw the line equivalent. I'm gonna show you what the 1 minute chart looks like without even having to go to it. Starting with this bull candle. Open, high, low, close. Bear candle, open, high, low, close. Bull candle, open. And they could have done anything inside of that candle, but I know where the open, high, low, and close is, which gives you insights, huge insights. Open, high, low, close. By this time. Now, this isn't really saying much because this is the actual session itself. But by this time, because this was actually the low of the session, first off, low of the session shorts got triggered. They're underwater. They're trapped. Friday's close is acting as a level of support. It just gave a V bottom. That's where they opened up. The next candle can give a open, low, high, close, which is exactly what they did. But point of the matter, let's just go to my entry. So when this candle closed, now again, I'm not above the breakout level yet, but look what's happening here. I'm gonna bring my drawing back up as well. Look what's happening here. Look where we closed. Look where we closed. Look at all of these obvious signs of trapping. Look at the closing price. We have volume trapped below that closing price, and they just broke out. You can just place your entry and a stop loss. And why? Because my thesis is that shorts are trapped. They're underwater. Now, if you don't get this, just hang on. But shorts are trapped. And if shorts are trapped, I'm just gonna go long. Simple as that. And that's exactly what I ended up doing. I just went long. Now, mind you, I didn't actually get in right there. I actually did not take a position until here. Listen, go. Here was my stop loss. And I went for 3R Easy money, done for the day. Just to continue on the NASDAQ chart, because a lot of traders may have thought, okay, Thursday, ACB reversal. Yeah, they did give a reversal. It was outside the timing window, but this is exactly why. I'm going to show you why. If you don't have confirmation of longs being trapped for a short trade, now they would have had to have triggered the new breakouts, which they did, and they stayed underwater. They broke down. They broke back down inside of New York's breakout. They broke back inside of the high of the day. Now, the New York session, funny enough, let's look at this here. The New York session, because this is what I'm drawing up during my session. They broke out, they pulled back. I don't care to be first. I'm not trying to get in at the bottom. I want to see if they're trapping first. So I wait for this. And then when I see this breakout, pullback, engulfment above the EMA, engulfment above the breakouts, bull candles above the breakout, bull candles above the trap volume, 10 a.m. window. I'm going to take my position with an exit and be done. But there was a sell trade as well. Now, those of you that are in the Discord, you know I hate the word valid. Are longs valid? Are shorts valid? They're both tradable. They're both valid. Now, for the trader that came back in the later PM session, okay, you got a nice opportunity short. During the US session, 10 a.m., if that's what you're sticking to, you got a nice opportunity long. Why? Because shorts are underwater. Now, on Friday, traders may have also thought that, oh, hey, they triggered breakouts long. We have a higher high. And oh, hey, look at this. They broke out up top, and now breakouts are underwater, and now shorts are trapped. So now I'm going to go short. Okay, they may have trapped higher level longs for that time being, but look who's still in the money. Look who matters, because these traders matter. Who's still in the money? Here's 9:30 open here. 9:30 did not open at a level. So what do? I wait for them to get to a level. And I wait for them to show me that they're trapping volume. Now, remember, if it is a trend trade, even if it's just a minute situation like this, let me also just draw this across because it it could paint the picture a little better. Look at that. Look what they just did underneath that breakout at the previous day's high. Now let's just draw this up for just a second. Trend trades, trap volume two. Now, there are some that will say Stacy did not teach trend trades. And I will argue with that and say, yes, he did. And he actually did say trend trades also trap volume. I'm saying this in slow emphasis because if you're trading with the trend, if you want to trade trend trades, trade with the trend. You need to identify the tracked volume against that trend first. Then we're taking our trade. Now I'm waiting for them to trap volume first. Now I wasn't on the NASDAQ, I was on gold. Gold did something very similar. It wasn't exactly like this, but gold trapped volume below the closing price. Higher highs on the inside, dump and pump. Easy. 10 a.m. 10 a.m. club. Shorts traps. Double bottom. Shortened M. They're breaking out. We're above the EMA. I'm gonna place my entry. I'm going to place multiple entries at that. I'm not just taking a position. I'm taking multiple positions when I have a strong conviction as strong as this. I'm taking multiple positions in the same area. Add engulfment, bull candle, add pin hammer, add bull candle, add. No more. after this point. No more. Because where am I going to put my stop if I keep going? And let's just go to gold. Again, similar scenario, different templates, but we have the same exact elements. We have the same elements. There's our high of day. There's our low of day, which, excuse me, shorts are triggered and they're underwater. They're not just triggered, they're underwater. We have higher highs on the inside. Guess what they're doing here? Because this is the first breakout. This is the original breakout on the way up. Guess what they're doing below that breakout? Now remember, I'm not drawing blocks to get in. I'm drawing blocks to represent the trapped volume. I need to see this first before I get in. Before I take my trade, I need to see traders trapped in the wrong direction. When they do that, bang, 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 no more. Take profit from level to level. Easy money. Some would come to this chart and say, oh, all I seen was the consolidation. Well, if that's you, pay attention to these levels. Train your eyes to move horizontally because look who's trapped now. So guess what my bias is heading into Monday? Longs are trapped. They're trapped above the breakout level. They're trapped above the high of the day. Longs are now trapped above closing price of Thursday. My bias is short. Now, do I know they're going to go short? Absolutely not, or at least not yet. But I already have a bias. And I have a extremely strong daily bias because longs are trapped. The money is here. If they close underneath the closing price, now I will have to be careful because this can just be a higher high. All of this can just be a pullback. They could be continuing to trap shorts below the closing price. Now, this is just me having a plan B. But as of right now, for the month itself, plan A, longs are trapped. My bias is short. I'm looking for sell high opportunities. I'm looking for easy low hanging fruit. I'm looking for the trade setups that have already, for example, already. Dang it, did I delete my chart? One second, I'm gonna have to redo it. Here is the previous week's high level. Here is Friday's closing price level. Monday triggers shorts and, excuse me, triggers longs and traps them at the close of the day, at the previous week's high, at the high of the month. And we now have shorts triggered, lower low on the inside. What is that the recipe for? That's the recipe for the pump and dump. And funny enough, in the 10 a.m. window, that's exactly what happened. Longs are trapped. When 9:30 opens, who's trapped? And if no one's trapped, wait for them to trap someone. And if they don't trap anyone, if it's just a narrow range day, I'm not even on that chart. I don't have a, oh, which pair am I not trading process. I only have a which pair am I trading process, which eliminates anything else that I should not be trading. Tuesday closes in breakout. Oh, there's my signal. Closing breakout signal at the low of the week. Shorts triggered. By the time 9:30 opens the next day, I'm asking myself, who's underwater? Because the shorts are underwater and 9:30 just opened. And mind you, I'm still waiting for 10 a.m., but 9:30 open and shorts are trapped. So if they're already trapped, guess what? I'm not looking for a trap and shift. I'm looking for a break and retest. Let's see. Make sure your mics are muted. Someone's mic is not muted, or maybe a couple people. All right, back to the money. Shorts or traps? I'm still waiting for 10 a.m. Now, when it comes to the U.S. session, during the U.S. sessions, it's either trap and shifts or it's break and retest. That's what keeps it easy for me. I don't care about all of these other variants or variables when it comes to the actual New York session, because the actual New York session will either do one of three things: break and retest. One, trap and shift. Two, three, absolutely nothing at all. And if it's absolutely nothing at all, now mind you, you can even have days where, like this chart, okay, longs were already trapped by the time New York opened, but they just immediately go hit stops and they have traders chasing this most likely, and they continue long the next day. This is not tradable. I can't trade this. They move too fast. 9:30 broke out, yeah, but they didn't pull back. At 10 a.m. club, we're already at the low of the day. Close the chart. There's nothing to do here. Now you could potentially pull up another chart, but I don't like doing that sometimes, most of the time, because I'm not necessarily trying to look for a trade. The next day, I need to already have my signals in place. I need to have already, because, for example, they can trap volume the day before. Longs are triggered at the high of the week and Tuesday's high, and they trap them underwater. We have a peak formation low of the week, peak formation high of the week, lower lows on the inside. When they break out, guess what they're going to do? They're going to hit the stops. Previous week high level triggered. Where is the money? Who is trapped? Who's underwater by the time the New York session opens? If no one is trapped, now I will bring up a example. That was the US 30 last week. US 30, high of the week, high of the month, high of the previous week. They, after our inside day, trigger breakouts. During the US session, they trigger breakouts again. Now, mind you, no one was actually trapped until this point. I don't know if anyone's trapped until this point. Now longs are trapped. We're at major round numbers. It's 10 a.m. 9:30, hit the stops and immediately close back inside the range. They already broke structure and triggered shorts earlier in the session. So for traders that were looking for this, you don't get that because they already gave you the lower low. They already triggered shorts. They hit the stops, they trapped longs, and now we're bursting back down to these lows. But you want to know what's so funny about this is that you could have just entered here with a stop loss here, here, here. It doesn't matter. Take profit levels where the money is, and you're done for the week. With sides, you're done for the week. P formation low, P formation high. This is an aesthetically pleasing chart. If you don't know what an aesthetically pleasing chart is, you need to start playbooking these setups. Now, I will help you all throughout the entire month. At the end of every week, I will have all of the best charts, the best scenarios in the Telegram. I will post them all. Your job is to save them and review them over the weekend. Over the weekend, you will not be watching not one single video, not even mine. Don't watch my videos. Don't watch Stacy's videos. Don't watch anything. Don't study anything besides the screenshots that I send in the Telegram. Over the weekend, I review my playbook. And then the next week, I'm watching, waiting, hunting for the obvious, easy money setups after they trap volume, after I am confirmed that longs are triggered and they're underwater. Once they're underwater, I'm just going to watch the next relevant levels and I'm going to take my position and go after the money. Now, for this day, this is just the day where you hold to the close. Now, you may have held it to the low of the week. Who knows? They come back inside Friday's range. Once they do that, everyone's traps. They're all underwater, and they're all about to get their stops hit. So I'm looking for the easy money. So, um, this will be all for today. Just wanted to go over some basics. We went over the daily chart. I went over a few templates, but more importantly, I went over what I actually need when it comes to filtering out these charts. Now look at my watch list. I have an insane watch list. And you want to know what's so funny? I still end up watching one or two pairs minimum, max three, but I'm keeping it very minimum when I am trading. Now, traders, they ask me this, okay, how do you figure out which pair to pick? Just pick one. But what if I pick the wrong one? Oh, well, I'll wait. I'll tell you an interesting story about cougars. I'm talking about the actual animal. They'll wait in a tree for as long as it takes for a deer to spawn right in front of them. They will jump down, break their neck, kill them, and eat. Now, if they do everything right and the deer somehow gets away, they somehow are not able to kill the deer, what they will do is go back to the tree and they wait. They're not wasting any energy chasing. Now, really think about this. Do you want to waste mental capital, physical capital on trades that you are now chasing? Or are you going to climb back on top of that tree and wait for it to come in your lap? And all you had to do was get in at a level in a specific timing window and target the money, spot the trap volume. I need traders to be trapped. This is the easiest thing to do. Look at the previous day's high. As soon as they trap the breakouts from that level, for example, look at Friday over here. Inside day on Wednesday. Thursday, lower low, short triggered. Okay, yeah, they go hit their stops. They do. They hit their stops. But on the way up, they trapped longs above the high of the day and the previous day's high and Wednesday's high. They gave us lower lows on the inside. We're inside. Longs above Wednesday's closing price are now trapped. And look what happens right at that level. Look what happens right there. Easy money. So this will be the end for now. We will do another review same time next week. Same time. I will have charts ready. We'll review everything that happens for this week. And then the first week of May, we'll be live in the US session. I will have a recurring Zoom link. So all you have to do is open a Telegram and join the recurring link. It will be a recurring link, which means all you have to do is click the link and you're in. There's no need to wait for me to send the link because the link will already be in here. You join the session, then hopefully we land a best trade setup. If not, slight review over the playbook, slight review over the fundamentals, go over a few pairs that are setting up for the week. What am I doing throughout the week? Am I trying to figure out what Friday's going to do for Monday? No. But all I am doing is I start on a daily chart. I wait for engulfments, breakouts, pullbacks, and I wait. And I wait extremely patient until it's extremely obvious to take a trade. Now I'm just going to draw up a scenario, a obvious scenario before we end. This is the most obvious scenario, period. A close-in breakout. Close-in breakouts. The very next day, they can. Now I'm just going to draw up this variant because they do this. They trigger longs. They trap longs. They break down. And they collapse. This is hands down the easiest setup to spot and trade, hands down. Closing breakout signal, high of day, high of week, high of month, longs trapped, or if it's the dump and pump, shorts trapped. We're back inside of the breakout level. We're back inside of the breakout level. Longs are trapped. I'm getting in and I'm targeting the money. And it's just that simple. So, yes, sir. M's and W's. M's for millions, W's for winners. M's and W's. Keep it simple. Now I'm just going to end the recording here. 1 second.